if you're looking for cheap stocks to buy, one indicator that can help you is the RSI. So RSI is relative strength index, and what it does is track a stock's gains and losses over the past 14 trading days. So if there's been a lot of gains, that RSI number goes higher. If there's been a lot of losses, then that RSI number goes lower. It operates on a scale of 0 to 100. The normal range is 30 to 70. When it's below 30, it's considered oversold. That means there's been a whole lot of selling of late. If it's over 70, that means it's really hot and there's been a lot of buying. So at either one of those extremes, investors can make either buying or selling decisions potentially based on the hype around a stock. So I'll look at some examples and show you when a low RSI number may actually be a good buying opportunity and when it may not be. So I'm going to look at Tesla as an example just because this has been a pretty volatile stock this year. So it's been trending downward. And one of the things that I always look for with stocks that are oversold is how often are they oversold. And this is important because it gives you an idea of how rare of an event this is for it to be oversold and whether it's really a good buying opportunity or is it a sign that maybe the stock is just really volatile. So in Tesla's case, 1, 2, 3, 4, 5 times has been oversold. So these red highlights, these red triangles here, basically telling us that it's been oversold 5 times within the past year. So that tells me right away that this is a really volatile stock. And that's really Tesla's nature. The stock is really volatile. It can go really high on good news. As you can see here, it was overbought. And it can go really low when there's bad news. And over the past year, there's been concerns about, pricing, margins, competition, all those things, and the economy, of course. Those are all things that have weighed on the stock. So in Tesla's case, the stock right now is about an RSI of 31, teetering right on that oversold border. And this is not a stock that just because it's oversold is a buying opportunity. It's more representative of the fact that it's a volatile investment. So in Tesla's case, a low RSI isn't necessarily a good reason to buy it. For example, if you bought it back here when the RSI was really low, under 18, you could have bought the stock for 180-ish, let's say, and right now it's around 145. So a low RSI doesn't mean that it's bound to recover because as you can see, this RSI number went back up, but that's just because it's been stabilizing. There wasn't a steep drop off as there was here. So steep drop off, oversold. Steep drop off, oversold. Steep drop, oversold. But when it's fairly stable like this, you can see the RSI is also normal. So it's within that normal range of 30 to 70. So just because it's oversold doesn't mean that it's a huge buying opportunity or that the stock's due to come back, because the RSI could come back up and the stock still doesn't necessarily move a lot. Because remember, the RSI is a moving indicator. It looks at just the past 14 trading days. So if there was a big drop this one day, as the stock goes further into the future, that bad day is going to get removed from its 14-day trailing history. So that's why the RSI can still improve, still look kind of normal, even though the stock is still heavily down. So that's a situation where just because the RSI says it's oversold doesn't mean it's a good buy. If it's really volatile, it's going to be oversold potentially a lot of times. So you can use stock screeners to help you find oversold stocks. And one that I like to use is on finviz.com. So if you go on here, set up a free account, you can save screeners. And one that I've got saved is for oversold stocks. So RSI 14 set to oversold of 30, right? So this tells you all the stocks that have been oversold based on today's values. And so I always focus on the stocks with the largest market caps just because those are going to be the safer investments anyways. If you got a really low market cap, if you're dealing with penny stocks, obviously those stocks are going to be really volatile. So they're going to dip in and out of oversold territory much more often than these larger cap stocks, these mega cap stocks. So let's go to the top 3 and see why they're oversold and what their patterns have been. So Intel Corp. So I'm going to change this ticker to INTC to get an updated chart here and to see how often Intel has gone oversold. So over the past 12 months, hasn't gone oversold besides right now. So right now its RSI is at about 27. So besides the frequency of the being oversold. The other thing I look for is why it's oversold, because the reason is important as well. Because if it's a problem with the business's fundamentals and earnings potential, then that's something that can weigh on the stock for a while. If it's just, okay, missed earnings by 1 cent, there's a huge sell-off, that's not necessarily a reason to be bearish on it, right? So let's look at INTC's recent news to see, whether there's an actual problem with the company or if it's a good buy. So if you go on Yahoo Finance, there's a section for news, and I like to filter out just the press releases, just to see what the actual company has been saying or doing, not any other opinion pieces. So one of the important things that came out was was about 3 weeks ago. It talked about its foundry business and its poor margins, right, and the struggles it's having. So when it's talking about a path to margin expansion, that tells you it's trying to improve its margins, aka they're not that great right now. And so Intel has been investing in its foundry business and trying to focus more on that. But the problem is that's not really a profitable operation, and that's going to be potentially a problem for them down the road. So in this case, I would say the sell-off is probably a bit warranted, just because there's concerns about the future profitability of Intel. So unless you want to go on that potentially long ride with Intel to figure out how long it's going to take for the company to turn a profit on its foundry business, or for that to be adding to its earnings, then this is probably a bit too risky of a stock to buy right now. And at 34.28, it's still not even at its 52-week low. So it doesn't strike me as a terribly good bargain, given all that uncertainty and the potential for its earnings to worsen. So that's the first stock. Next stock, let's look at Boeing. So Boeing obviously has been a really volatile stock of late, just because it's been facing a lot of bad press, problems with its parts. There's been the whistleblower. All sorts of bad news. And unsurprisingly, we count the oversold dips. We've got 1, 2, 3, 4. 4, maybe 5, let's say 4.5 times that it's been oversold. So again, fairly common for it to be oversold. It was overbought as well. So again, that tells us, 2 times overbought, 4 or 5 times oversold. So that tells us this is a really volatile stock. So that's another classic example of where RSI is not going to be helpful for this stock, just because Boeing's been really volatile. And of course, there's some big problems facing the company with its parts, how good its planes are. Another stock that, doesn't strike me as a buy just because it has a low RSI. Third one on the list, Prologis. So this is a real estate investment trust, and so it's potentially a big e-commerce play. This company is in warehouses, fulfillment centers, so providing that kind of space. So it's a big e-commerce play. If you're bullish on e-commerce long term, a potential play there. So it's been dropping lately, and oversold once, 2, 3 times, let's say. So a bit common, but these are kind of bunched together. We could say 2.5 times, let's say, or 1.5 times. 1.5 to 2 times oversold. So not terribly volatile. And the last time it went oversold, it did go back into overbought territory. So as you can see, it does happen a bit with the stock, but the problems facing Prologis, are more to do with interest rates. The company's fundamentals are still not that troubling. Like if we look at its ticker symbol to see its recent news, look at the press releases, and again, let's filter out these opinion pieces. So it recently reported its first quarter results, and one of the things that stands out is, if you look at the headline, that gives you a good indication of what the company's thinking, and says near-term macroeconomic uncertainties. So it doesn't say it had a blowout earnings report or it has a huge guidance upgrade. It's talking about macroeconomic issues. So the problem is, volatile, persistently high interest rate environment. So real estate investment trusts often have a lot of debt. They're primarily plays for the dividend, just because they offer fairly good yields. If you look at Prologis, 3.7%, so not a bad yield. But the problem is with interest rates high, people can go elsewhere to bonds and other safer investments than stocks and get better than typical yields. So that's why real estate investment trusts haven't been terribly good buys in the past, year and a half, let's say. So in Prologis' case, the problems I'd argue are outside of its control. Like interest rates, if interest rates come down in the next few weeks, then obviously the stock would start to rally just because lower rates are good news for its business. But in terms of its fundamentals, it's still turning a profit. It still has a pretty good path forward in terms of e-commerce and growing its business. So even though it's been oversold, 2-3 times in the past year, and maybe a little bit volatile, generally it still has some decent fundamentals. So this is the only stock of those three that I'd consider buying, just because in terms of the fundamentals, it has a bit more promise, and it could be a good buy to buy, especially for the long term in e-commerce. There's not the same problems plaguing Prologis that there are potentially for Intel with its foundry business that may not be all that profitable, and for Boeing, which is facing a ton of problems these days. So Prologis is the one that seems more likely to bounce back in the stock that I would buy if I was looking strictly at it being oversold. But as I showed you before, just being at a really low RSI level, like in this case 16, isn't an indicator that, okay, it's more likely to bounce back or less likely to bounce back. It just tells you the gravity of that recent sell-off. And right now, it's not quite at that low that it reached back several months ago, but it could be a good play for people willing to buy and hold on, especially with the high yielding dividend. A decent play. But generally, when you're looking at RSI, the two things to remember is, how often does it go oversold, and why did it go oversold? The why is the important reason to understand, okay, why are people selling it off? Is it because there are actual problems with the business, in which case the stock could still go lower? Or is it an overreaction? Is it to do with a slight earnings miss, or things like interest rates that are really out of the company's control, as in the case of Prologis? Then in that case, you could make an argument that, okay, it is worth buying for that reason, just because the sell-off may be a little bit overdone. As you can see in this case, there was a bit of a rally that followed. Doesn't mean it's going to happen this time around as well, but if you're buying for the long term with the company doing well, it's more likely to recover than those other stocks.